Let's bring in Susquehanna's Chris Murphy for more context on this whole world. Chris, good to talk to you.
Thank you. Good talking to you, too.
As you know, this activity has exploded. The availability of options on stocks and indexes that are listed for one-day expiration or just expire each day of the week has gone up. So it's not just that people discovered them, it's that there are more options available. On the other hand, they get blamed every day, as far as I can see, people making market commentary. Whatever the market does, it's the zero-day expiration option. So why are people using them so much right now? And principally, what do you think it means for the market action?
Well, first off, can't blame zero-day options today. You got to blame Jerome Powell.
Yeah.
But why are people using them more? Like you said, they're more available. Volume follows volume. They're more liquid than ever. And they're, for the S&P, there's a maturity every single day. Not to mention, the last year and a half has been all about macro events. We kind of, sit around waiting till Powell talks, and then all of a sudden we have an explosive day. We got a couple more big days coming up. So all that matters right now is the macro, and the best place to get macro exposure very liquidly is either in the SPY ETF itself or the SPY options.
Right. So the ETF on the S&P 500 or those options on that ETF. I guess maybe the rationale behind some people being concerned, even in the abstract for this kind of thing, would be if there was a real cluster of certain bets on certain levels for the index, and we went through that level, and all of a sudden the people who sold those options have to hedge in a certain way. So without getting into all the details, is there a risk that it creates these kind of air pockets in the market on a short-term basis?
Well, the type of trading that we're talking about is really not. I mean, it trades over the course of the day. It's two-way. It's much more mixed than some of the doomsday predictions are pointing to. It's buying and selling. It's opening and closing. It's so mixed. Now, one giant block macro trade can certainly have an impact. It certainly has an impact when it goes through the strike. And we do see those trades from time to time. But we're not seeing those trades every day. The blended, over the course of the day, back and forth, typically mostly closed by the end of the day. That's really what we're seeing. And that's not having as much of an impact, I think, as people are hoping it does.
Are most of the volumes coming from retail, or is it institutional strategies that are being implemented this way?
Well, a lot of it may have started as retail, but when you start to see, momentum, you start to see more volume, you start to see more trends. Of course, there's going to be some systematic trading that starts to follow along. Obviously, market makers are able to reduce their risk from other positions, once again, in the most liquid products like SPX and SPY and things like that. So it's become a combination. It did start, it started in 2021 with single stock names, if you remember, the meme stock era and GameStop and all things like that. So it's been kind of a long process. Yeah,
and certainly Tesla, I mean, the activity used to dominate in that stock as well. What are you seeing just away from this area in terms of the supply demand and strategies people seem to be using? We have this pullback in the market. I mean, you seem to see some flow into some of the big NASDAQ names from the options perspective. I mean, why would that be occurring now, do you think?
Yeah, great question. And these are some of the trades that I think are more impactful than just trading in the S&P all day long. So we started to see large blocks of trades in all the big FANG names, Apple, Microsoft, most of which was big blocks of calls. Microsoft was the put sale. They were focused on March 24th. So then we looked at the calendar and you saw a couple big more macro events, but really the FOMC on the 22nd. And what happened with Powell's commentary today is it went from the favorite being a 25 basis point hike to the favorite being a 50 basis point hike. And now what's great about trading in the options, you could say, okay, well, the market now thinks it's going to be a 50 basis point hike. The FANG stocks pulled back. I'm looking at these options, and what if a couple of these data points come in and it goes back to being a 25 basis point hike? Well, then you might see a bounce in those names, and we kind of track that flow, and we think that that's what those trades were kind of targeting.
Interesting. Yeah, so laying the groundwork for maybe a cheap relief rally trade, even while everyone's consumed with worrying about where the Fed's going to go. Interesting. Chris, really appreciate you running through all this with us. Thanks so much.